Hi, Harry Dent on April 9th here for the Rant. I just seen an article yesterday that said Bitcoin looks poised to break either up strongly or down. And you know, I am looking at Bitcoin closely because it has been a good leading indicator for stocks. Remember, people have such terrible views of Bitcoin and cryptocurrency. Not a safe haven, okay? Not an inflation hedge, at least not yet. Gold is that. It is a harbinger of a new boom like the dot-com boom in the late 90s that is only now maturing. So that's the way I look at it. But Bitcoin has been the epitome of this bubble. That's the point, just like the dot-coms were in the first tech bubble that peaked in March of 2000. And note, 21 years later, that's a Fibonacci number, by the way, and I think it was 8 years from peak to peak before that, or 13. You know, we had the same thing happen. We had a big tech bubble peak in early 2000 and a big crash during the boom. Now we're having the second tech bubble peak with all the other bubbles in the world, and that is signaling a big crash coming. And this time it happens in a difficult economic cycle of demographics and all of our cycles. And then, of course, this is what I say leads us into the next 2 to 3 year depression. So Bitcoin is important to watch here. And Bitcoin, if it breaks below 51,000, you know, it hit 60, almost 62,000, it pulled back, it already broke a up trend line thing a bit. If it continues to break down, the next resistance, or actually support, is near 51,000. If it breaks that, then it's around 43 to 44,000. If it breaks that, that is going to be the biggest single sign. If Bitcoin fails here, then stocks are very likely to follow. And I remind people that if we go back to the first kind of real bubble peak in stocks, which was January 2018, Bitcoin peaked about 5-6 weeks before that in early to mid-December. Okay, so Bitcoin did lead that first crash, and ever since we've been in this topping pattern. I know you've all seen it in the newsletters. I use it a lot. It's the most important chart right now, the megaphone chart. Since that January 2018 top, we have seen crashes and then higher highs and then lower lows. That's the megaphone pattern. That pattern does not come that often for a good reason. It usually happens at the tops of major long-term bull markets where stocks still have momentum that wants to go up because they've been going up so long and everybody expects them to, but the fundamentals, as I studied, like demographics or technology cycles or things like that, are failing, and that's why you get higher highs. Oh no, stocks always good. But then no, every correction takes you to lower lows. So I think you know my projection. The megaphone pattern is in a position of not only being in that third and final wave, it's in an overthrow, which is typical of that last wave. It goes over the top of that megaphone line to say, oh no, I'm not topping, and then it crashes. So we're gonna know pretty soon on this. And so I'm tracking this megaphone pattern, a whole wedge of stocks coming up into it, and Bitcoin, because Bitcoin is the most likely single asset or you know, security or whatever you want to call it. You don't call it security in that industry, by the way, to tell us to lead stocks down. If Bitcoin starts pricking its bubble, there's no way stocks are going to hold up. So we are going to be watching that. I advise you to be watching it. 51,000 is the next test, roughly. Breaks that, boy, it's starting to look like a top for Bitcoin, and therefore a top coming here soon for stocks. And remember, I said in the April issue, they were in this wedge for the S&P 500, and we finally got to the top of that wedge. It wouldn't go up there, so we're at a point where stocks could peak, but it's likely to crawl up that wedge and do a little throw over there too. We're looking at 4150 or a little higher on the S&P is a likely final target. Not that much higher from here, sometime in the next couple of weeks, I think by late April. And you have to understand, this is so unprecedented. We're already past a lot of the cycles and stuff where this should have peaked. This whole thing should have peaked late 2019, early 2020. And because there was such a massive response to COVID, I mean, remember, I've been talking, you add up all the monetary program in the last over year just before COVID and the fiscal stimulus since COVID, we're talking 45% of GDP. And if you add the new 2.2% infrastructure plan, we're going to be 55% of GDP. We've never seen stimulus on this level. At the bottom of the 1932 crash, when the government first started saying, oh my gosh, we got to stimulate the economy, because this wasn't so typical back then to just print money, only 6% of GDP. So that's what we're looking at here. There is no way we're not going to have the greatest crash in history in the next couple of years. It's just a matter of when this thing plays out. And I'm always looking, here's the most likely time we could top here. We'll look for this. If we break out of this wedge pattern down and if Bitcoin leads, that'll get us looking even closer and expecting it. Then there'll be certain break points until we finally can say, this is really looking like a top. Because we know no matter what happens, governments print massively more, but there is a point where this is going to top. April is one of those, and I think the next one will be June. I think there's a much better chance than people think, because there's no good reason for the markets to peak here. Biggest stimulus ever, it's still going to come out, a whole new infrastructure plan, but you got to remember, the markets discount everything already. The markets know all of this, and their ascent is slowing here, this wedge is narrowing, and so there's a good chance we could see a peak in the coming days or weeks, and I will keep you updated.